Dan, again, confusing signals out of Washington. Names like Netflix down 7%. Did you pick anything up here?
No, I didn't, because I think you had commented on this earlier. The market in January ran too far, too fast, and then it corrected some, and then went up again. But I think, if you just look at the U.S., it's a misleading view, because if you look at the Chinese stock market, the Shanghai Composite, for example, that's down 20% from its highs in January. Their market's near a two-year low. So it really doesn't make a whole lot of sense in my mind that U.S. stocks were, near their highs when you've got, the other side of this trade dispute down near two-year lows and down 20%. And quite honestly, a lot of the tech stocks shouldn't be up a lot. So we didn't really go bargain hunting today. I thought about it because I have my shopping list written down, so I know what I want to buy. But we didn't actually go ahead and buy anything today. But there are certain names in the internet space, for example, and in the media advertising space that we're looking for.
Well, Dan, even in China, if you look at the very large tech stocks, the FANG-type stocks in China, yes, they're down a lot too, but they are outperforming still. If you look at any of the indexes where they have a huge weighting, they're holding up better than kind of mainland China plays. So it seems like a global phenomenon that people want to hide in these very large internet companies. I guess the question is, when does that dynamic overshoot a little bit?
Well, here's the thing. It actually makes sense to hide in the U.S. companies, because if you think about it, well, does Google or Facebook have much business in China? No, because the Chinese government is so restrictive on the ability of U.S. companies to be able to do business there, you don't have much revenues out of Google or Facebook or Amazon or Netflix. So for those names, this doesn't really matter that much. Today was sort of a global momentum, tech-led sell-off, but I think if you sort of sit back and think about it more broadly, you go, well, it doesn't really matter to them. Now, if you're a semiconductor company, or if you sell PCs, PCs, number one end market is China. Smartphones, number one end market is China. Autos, number one end market is China. That's a big problem. And so it makes a lot more sense to take those stocks down than it does the internet names, other than the fact that, a stock that's up 100% for the year, that doesn't make a lot of sense if the revenues are growing 30%.
And that being Netflix, of course. So the semiconductors were down about 3%. But Dan, just to be clear, then you agree, because it does seem to us looking at this like there's no reason from those headlines that Google, that Facebook, that Amazon, that those names should have been sold off today, right? I mean, it has nothing to do with their business.
No, and that's exactly right. I mean, but you have to remember, a lot of tech funds or mutual funds, when they own technology, they'll own a broad basket. So they'll own those names, but they'll also own semiconductor stocks. They'll own the high-flying software companies that don't have any, have 100 PEs, very little in earnings, huge valuations. They'll own them too. So when you're going through a day when you're de-risking your portfolio, you're just throwing out everything basically with the baby with the bathwater. But what typically happens is that's what creates the buying opportunity. So, on that shopping list of mine sits, Facebook and Google. Semiconductors do not sit on that shopping list. In fact, we were selling a lot of those names last week because we're like, this doesn't make any sense. If this gets worse, those are the names that are going to get hit. Then on top of that, you have massive amount of inventory sitting at companies like Apple that need to get worked off, and then you've got the currency issues on top of that. So those are not things, you really have to deal with. There's no inventory at Facebook you need to worry about, right? So it's a different situation when you look at it, and eventually, people will start to sift through this instead of just sort of selling everything.
Dan, you alluded to media and advertising names. Did you just mean Facebook and Google, or more traditional plays as well?
Very good pickup, Mike. Actually, I was alluding beyond that. And so if you think about what's going on right now, you have the biggest sporting event in the world going on, which is the World Cup, which is actually a world event, right, as opposed to the World Series. So you've got a month of games being played. When they invite Japan to play in the World Series, then I'll consider it a World Series. But anyway, you've got advertising going on, and that's really, that's going to be pretty good for a lot of the media companies. So we're starting to look at some of the names outside of just the internet companies, because we go, well, this might start to benefit them as well. You've got the midterm elections coming up. That will be really good for advertising dollars being spent. And the economy in the U.S. is doing really well. So I think you look at all of those things, and the fact that these stocks have rightly gotten beaten up over the last couple of years, and that makes an interesting space.
Well, we got to go, but I got to know if Mike supports this World Series concept with Japan. And
every now and then then, you know, Toronto's been in the World Series.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.